First up on the show, ET Now's Anurag Joshi spoke with Sumeet Narang, the founder and managing director of homegrown private equity firm Samara Capital. And in that exclusive interaction, he shared insights about the investee firm Agrotech's recent acquisition of Del Monte Foods, Samara's dry powder, and what their exit strategies are, and their plans of seeking listing in the coming months. Let's listen in.
Samara was founded in 2007. And 4 of us came together during the formative years of the firm. Gautam, Paurush, Manish and I. Gautam and Paurush were colleagues at Citigroup, and Paurush, Manish and I were together at IIT Roorkee during our undergrad. Manish, who's managing director and co-CIO of the firm alongside me, we go back a long way to our middle school years in Kendriya Vidyalaya in Hyderabad as well. Since then, we have expanded the leadership team to 8 members, and many of whom have grown within Samara, what we embody the Samara way. And Vikram, Anchit, Abhishek are prime examples of our focus on internal growth and leadership development. And Abhik, who heads our operating group, was CEO of one of our companies, Spot On Logistics. And after completing the sale and integration process, we got him back. When we started the firm back in 2007, we were very clear that we want to be a firm which is an owner, operator, investor mindset and capabilities. Buyout was in infancy in India during those years. So our vision was 100% clear. But at the same time, we had 0% experience and capabilities, but that did not deter us. So as we built our own firm and capabilities and started executing and becoming better at doing buyout transactions, I think the overall ecosystem for buyout opportunity also increased materially in the industry, whether it is deal flow, leverage available, management teams wanting to be a part of a private equity buyout as a career option. I think all the pieces of what I would call the buyout components have improved materially over the last 15 years. And as we have learned and refined our approach to the buyout strategy in a I would call a dynamic investment landscape, which is emerging very fast in India and for the better. So that's been our journey thus far over the last 15 years. But I would say Samara itself, I think the private equity industry in India and Samara itself, I think it's still early days and a long way to go both for the industry and our firm.
On the Del Monte Foods acquisition deal, now as an investor in Agrotech, take us through the deal process and how would you guide the growth strategy, the trajectory of the company?
So consumer is one of the 4 focus areas for the firm. And as we have done investments in the consumer space, one area that really intrigued us was on the food industry side. And we saw that convenience food in 3 formats, ready to eat, ready to cook and eating out, plays out with when an economy goes through rising per capita GDP, consumption, nuclearization of families, women entering workforce. So I think those trends made us do more work on both the ready to eat and ready to cook categories to find an investment case. What we also found while doing our work were few key things. One, I think there are small regional brands. They're very strong, but I think the food palette in India is such that many of those can't travel beyond the region because they're very, very focused on catering to the taste buds of that particular region. But we saw that certain brands and categories where the palette is pan-India. So if you see the successful food businesses in the country, Maggi, chocolate, Mondelez, they are pan-India flavor and not a regional. So I think we found that if you find a brand and a business which has a pan-India appeal, catering to taste buds in a very democratic way, but the category is very less penetrated, then I think there's a strong investment case to be made. So we found Agrotech Foods having Act 2 popcorn, Sundrop, peanut butter, both were emerging and rising categories where they had dominant position in these 2 categories. And Del Monte range of products, especially with Italian range of sauces and condiments, as I think more and more cooking at home of Italian range, especially the younger generation is happening, I think the category penetration will grow. So I think that was our thesis: convenience food, ready to eat, ready to cook, pan-India appeal with brands and categories which are top 3 in their category or subcategory, and hugely under-penetrated. So that's where I think we first took control of Agrotech Foods in a transaction where we bought out Conagra stake, followed by a transaction where Del Monte is combining with Agrotech. The combination is critical because if you see the global food companies, whether it is Mars, Nestle, they operate in many categories and subcategories, and that brings the scale advantage in what I would call a 3-pronged flywheel in a consumer product food business: product formulation, innovation and manufacturing excellence, category development and marketing, and sales and distribution. So I think combining these 2 businesses gives us a strong portfolio of brands and scale advantage, which I think will allow a faster category development of these brands and much more synergy both on the manufacturing supply chain side on one hand and sales and distribution on the other hand as we scale the combined platform.
There have been several high-profile PE exits from India this year. We have a very buoyant pace of IPOs happening. How would Samara strategize its exits to bring in the best returns for the fund?
So I think if we see the private equity industry and even in our history, very brief history of 10-15 years, there are basically 4 areas of exits for a private equity investment: global strategics, domestic strategics, sale to other PE firms or financial sponsors, and the public markets, IPO followed by follow-on offerings. So I think basis market cycles, it varies that which segment of this exit is more active than the other. I think as we see the market conditions now, and we have seen last 12-15 months, that the public markets are quite buoyant. So I think on back of that, both IPOs as well as Indian companies which are listed, one, I think many of them are generating strong cash flow, sitting on cash reserves, they have a currency. So we see IPOs and domestic strategics as 2 strong avenues of exit in the what I would call a 12, 15, 18 month time horizon basis.
And are there any exits that you're contemplating at the moment?
So if I take a 24 to 30 month view, I think there are 5 or 6 companies that we would exit in that time frame. If I take a 6 to 12 month view, I think in terms of 2 companies that we would plan to take them public in that 12 month time frame would be Sejanan Medical Technologies, which is a leader in the cardiovascular stent space, and the other one is More Consumer, which is a leading omni-channel food and grocery business, which is also, I think we are starting the preparations to take it public in the next 12 to 15 months.
Are you looking at emerging sectors like AI, semiconductors, renewable energy? Of course, we have PE funds, which are increasing investments in India. What is your thinking?
So I think there are 3 ways to invest in these emerging sectors. One, I think a venture capital where you are backing an early stage company. We are not venture capitalists as a firm. The second is, I think, infrastructure plays with data centers, renewable energy development. We again don't have an infrastructure fund of focus right now. I think the third way to play is finding businesses which will materially benefit as a result of these trends, or businesses that are catering it to these trends. So I think if there's a semiconductor design company catering to the semiconductor industry, that would be part of our thesis. If there's a consumer or business with development in AI and usage of data can be materially strengthened, that would be our focus. So I think we would play these new emerging trends by backing businesses that benefit from these or catering into these trends, because these are strong underlying trends that are playing out.
And are there any names you want to share that you will be investing and you will be supporting in the near future?
So I think India software for India opportunity is one thesis we are working on. And I think with the rise of AI, I think the adoption of adoption by Indian enterprises with Indian software because India is getting digitized at a rapid pace, is one thesis, I think, on the back of AI that we are looking at.
As a founder of Samara, what is your dream? What is your goal? How do you see Samara evolving over the years?
Yes, so I think we want to continue to strengthen our flywheel, comprising three components: deep and insightful research, strong networks that translate that research into an investment opportunity, and value add, both pre-investment and post-investment, so that we can achieve targeted returns. At the center of this flywheel is growing talent, both within Samara and our investing companies. And I think showing up every day at office so that we improve 1% a day. So I think that's the core of Samara. As I said, the Indian private equity industry, it's still early days, long way to go. As long as we keep strengthening our flywheel of research, network and value add, with growing talent at the center of it, and improve 1% a day, we'll be very happy growing in that direction.
If you like this video, then like, share and subscribe to ET Now.